In today's video, I want to share with you my 3 reasons, at least the 3 main reasons why I like private equity versus private lending. Now, before I get into the details, please make sure you subscribe to your boy's YouTube page. If you already subscribed, thank you so very much. You know, we drop information, videos, content on a daily basis. So thank you so very kindly. Let's get back to the conversation on why I like private equity over private lending. I'll lay a foundation just in case you don't know what either of these two are. I want to make sure that you understand them. Now, this is going to apply to you if you are a passive investor, meaning that you don't want to deal with the responsibility of having to find a deal, put the deal together, renovate the property. You don't want to do none of that. So you don't want to be an active investor. Maybe you want to be a passive investor. You just have some money in your retirement account, savings account, a money market. Maybe you're not interested in the stock market anymore. You want to allocate that money into a real estate investment deal. Well, that's going to make you a passive investor. You're passive because you ain't doing nothing but basically renting your money out so that it can make money for you. On the other hand, if you're an active investor like me, you want to pull up your sleeves. You want to get in the grind, in the trenches of the deals. You don't mind finding them, underwriting them, dealing with whatever that comes with being an active investor. So whatever side of the spectrum you're on, this is going to be very important for you because I'm an active investor. I work with passive investors, and I'm going to be straight up with you. I have a lot of passive investors who like private equity structured deals more than they like private lending structured deals. And then I know some who don't like the equity structure. They like the lending structure. But it's all up to you, what your risk tolerance is, and what you're comfortable investing your money on. So with that being said, when I say private equity, I'm basically talking about structures that you're using to pool resources together. You're putting them all together. You're pooling them into one group or one entity or one fund or syndication to either purchase a single property or to purchase multiple properties or even businesses. So this is more of a private equity structure. A private lending structure in most cases is based on a single asset. So for example, if I as a fix and flipper have a property that I want to acquire, I want to buy it, I want to fix it up, and I want to flip it, and I need capital. I need someone to partner with me or to join me on this deal financially. Most of the times, they're going to assume the role of a private lender. So that means I'm going to have 2 very important documents. At the very least, I have to have a promissory note and a deed of trust, which is going to be recorded as a lien against that home because the private lender wants to securitize their money. All right. So once we buy the property, the private lender is going to wire the funds to the closing attorney. They're going to finance the deal. We're going to fix it, flip it. And then when the deal is sold at closing, the private lender gets their money back, and you just recycle that same process on the next deal and the next deal. With a private equity structure, you're not dealing with promissory notes and deeds of trust. Now you're dealing with other SEC regulated documents like private placement memorandums, operating agreements, limited partner agreements. So you're dealing with more sophisticated information and documentation that attorneys who understand that have to put together. So this is a different ball game. But again, I'm personally saying I like private equity versus private lending for at least these 3 reasons. Number 1, paperwork. I'm telling you, especially if you are a single family fix and flipper and you are going in and out of these fix and flip deals, there's going to be a lot of paperwork involved when you're dealing with private lenders, because every home that you bring a private lender on, you have to have a promissory note, you have to have a deed of trust, they have to be added to the insurance. There's a lot of paperwork that has to be done, and I'll be the first one to tell you the reason why I started leaning more towards this, that's why I put a check here, than this, that's why I put an X here, is because once you do it enough times, especially when you start doing it and missing deals because you can't fund the deals quick enough, you're going to realize real quick that it's better for you to start playing a different game and looking at different structures like private equity. So paperwork is one of the top reasons why I like private equity over private lending, because of course it's going to cost more to get an attorney who understands the SEC, Security and Exchange laws, to draft up the documents. But once you draft up the documents, once you create the entity structure as a fund or a syndication, the documentation is done. The fund or the syndication or the entity can be capitalized or funded by the investors, and now you're free to go do the deal. So that is my top reason: paperwork. All right. It's not easy paperwork, but you're paying lawyers to do this stuff. So it's easy for you as long as you're willing to put the money up and understand how this works and how to operate it, how to be a fiduciary, how to be what you should already be if you're investing in real estate. Second reason is what we call dry powder. Dry powder is free cash flow that you have sitting on the sidelines waiting to get into a deal. I'm a witness because I primarily fix and flip. There are deals that I miss because I just didn't have the dry powder. Because when you're using your own resources, I remember one time I was at a point where I think we might have had about 4 or 5 contracts signed. We were under contract to purchase 4 or 5 properties. These were deals that we had already gone through the underwriting process on. We knew that there were good deals. I think 2 of them might have been buy and holds. The other 3 were solid fix and flips. And by the time we got all 4, if not 5 of these contracts signed and locked in, the first 1 or 2 contracts, we were already in the process. I think we had already closed on one of the properties. We were in the process of renovating it. This property had a lot of stuff going on. We were probably like $70,000 into this fix and flip. And then we had the second one that we were closing on. We knew we were going to be about $40,000 or $50,000 into that. So when you start doing the math, you like $130,000 or $140,000 into 2 deals. Those other 3 deals, we didn't have enough capital to take them down and to hold them until we recycled the money. So when you have a private equity structure, you got that dry powder. And even if you don't have enough cash, you might be able to leverage that with a bank to get a line of credit. There's so many things you can do because you have a bigger pool of money. My third reason is scalability. Back to the fix and flip of single family properties, where I did 2 deals during this time with the example I'm saying, I could have done 5. So I could have literally did 2 times more deals. I mean, I did 2 at that time. I closed 2, bought 2, but I could have closed and bought 5. That would have been more than double, 2.5 times more deals had I had this type of structure, and if I was not using that type of structure, which means it's scalable. Now, of course, for you to do any of this as an active investor, you should know what you're doing. You should be well educated. You should be experienced. You should have a whole lot of credibility, because this is not something to take lightly or to play with when it comes to other people's money or when it comes to other people's lives or legacies. So you better make sure you know what you're doing. As a passive investor, you better make sure that you vet the active investors so that you know what their track record is, their credibility, and their success proof in their pudding. Of course, if there's anything my team and I can do to direct you to the information, the education, or the support for any of this, whether you're an active investor or passive investor, please click the link in the description. We have a private investors group that we've put together. We literally host regular meetups, weekly coaching calls. We have a lot of one-on-one sessions with our active and passive investors, because we want to make sure that they're doing exactly what needs to be done so that they can take their lives and their investment ventures to the next level. I'll see you in the next video.